Good afternoon, students. Last class we all studied depreciation account. Depreciation is mainly calculate the asset value. The depreciation means every year the asset value is decreasing value. The asset value is depreciation is calculated amount of depreciation and rate of depreciation. The depreciation is two method of depreciation: fixed installment method and diminishing balanced method. The fixed installment method or original cost method. The method, one time you fixed the depreciation value is you calculated means next year you calculate same depreciation value only you calculate. Nobody change. You calculate. First time you calculate means next 2 years, 3 years, 5 years, 10 years means same amount only you use. But diminishing means automatically every year you calculate new depreciation value. Okay. The depreciation is two important methods. For first one fixed method, second one diminishing balanced method. Diminishing means every year reducing the value, that is diminishing. Okay, listen students, now we are discuss about capital and revenue transaction. Capital and revenue transaction is the company easy to assume a financial position future plan or post some future planning is decided to easy to decided. The current period position the financial status easy to pre-plan of next accounting period. Okay, first meaning the main objectives of accounting of business transaction is ascertaining the result of the operations and financial position of the business concern. The transaction carried on the yield of the benefit for the current accounting period, or they may yield benefit for more than one accounting period. A current accounting period is it to more benefit, or how much of profit earned, how much of loss is it to assume. The one accounting period means April 1 to March 31st is one accounting period. How many months? 12 months. According to the matching principle, the expense incurred in the current accounting period must be matched with the revenue earned during that period. In the case of certain expense, the benefit occurs only the relevant accounting period. They are called revenue expenditure. For example, salary revenue expenditure. Listen students, some revenue expenditure you underline: salary, rent. But in the case of certain expenditure benefit earned beyond the one of accounting period, they are called a capital expenditure. To exhibit the true fair view of profitability and the state of a proper allocations of capital and revenue item is required. The revenue item or to be shown on this trading and profit and loss account. The capital item or to be shown in the balanced sheet. Already you studied 12th lesson financial account and trading and profit and loss. Trading account means you calculate opening capital, opening stock and closing stock, purchase and sales you calculate. Next one, profit and loss account. Okay, next Classification of expenditure. Expenditure, three classification: capital expenditure and revenue expenditure and deferred revenue expenditure. First one, capital expenditure. The expenditure incurred during the accounting period. Accounting period means April 1 to March 31st. The benefit of the which will be available for more than one accounting period. It includes an expenditure resulting in the acquisition of any fixed assets or contributes the revenue earning capacity of the business. It is non-recurring its nature. First one, features of capital expenditure. It is give benefit for more than one accounting period. More benefit of one accounting period. Next one, including acquisition of fixed asset and all expenditure incurring up to the point an asset is ready for use. It is contribute to revenue earning capacity of the business. It is non-recurring in nature. It is shows on asset side of the balance sheet. Capital expenditure full and full you write only. Asset side you write. Capital expenditure means some installation of business, some installation of new method of machines, that is capital expenditure. Next one, revenue expenditure. The expenditure incurred for the day-to-day running of the business or for maintaining the earning capacity of the business is known as a revenue expenditure. Day-to-day running of the business is revenue expenditure. It is recurring in the nature. It is incurred to the generated revenue for the particular accounting period. The revenue expenditure may be incurred in relations with the revenue or relation with the particular accounting period. For example, cost of purchase of revenue expenditure related to sales revenue, rent and salary are related to particular accounting period only. Listen students, this is capital expenditure means mostly fixed asset only. Capital expenditure you write only capital, that is accounting, calculate in one accounting period, and you write only asset side only. But revenue expenditure you write trading and profit and loss account only you used to write. Example of expenditure example is land and building, office equipment, computer, air conditioner, that is capital expenditure. But revenue expenditure, purchase of goods for resale, administrative selling and distributes of expense, manufacturing expense, that is example of revenue expenditure. Listen students, mainly everybody you understood, mainly you learn 2 points. Capital expenditure means mostly high value of the asset, that is capital expenditure. The capital expenditure is land, building, office equipment, computer, air conditioner, that is machine, plant, installation charge, that is capital expenditure. Revenue expenditure is most of purchase of goods, of resale of goods, administrative and selling and distribution expense, manufacturing expense, that is revenue expenditure. Listen students, this method of one in this lesson easy to three or five questions you write. That question is which content is capital expenditure, which content is revenue expenditure. You write that is three important 3 mark sum this chapter. Everybody you thorough, easy, very easy only. Everybody you write this lesson sums Okay. Listen students, every day you practice more, at least 2 3 sums you every day you practice means easy. Okay, listen students, 50 percentage book back sum you importance means 50 percentage book exercise sums, very important in more concentrate in illustration sums. Okay. Okay, students, thank you. Next class we will discuss next one new topic. Listen, students, everybody, you write your class work, book back sums, you work out. Okay, thank you, students.